a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about ETFs that benefit from the supercharged American consumer. So recent reports, economic and earnings reports, they show that American consumer is very strong and ready to splurge this holiday shopping season. And that is thanks mainly to large cash cushion savings that American consumers have built over the past almost 2 years since the start of the pandemic, and rising wages too. We know that wages have been rising. So retail sales, they grew at the fastest pace in 7 months for the month of October, and that was the third consecutive rise month over month. And we know that there have been some supply chain disruptions and rising costs and labor shortages. They have affected margin pressures for retailers, but retail earnings were much better than expected despite all these issues. And now supply chain disruptions are expected to ease. And in fact, we have seen that factories in Asia in particular, they have restarted production and supplies because COVID situation and vaccination situation in those countries is improving. That said, global supply chain situation will not return to pre-pandemic level anytime soon. That will probably happen sometime next year. But retailers here have built a lot of inventory, and it seems they are ready for the holiday season. And we saw from the recent earnings reports that these sales were very strong. Retailers like Walmart, Home Depot, Target, Macy's, Kohl's, they reported very strong sales. Now, some stocks did not do very well after those earnings, like, for example, Walmart and Target, because of the margin pressures. But Macy's, Kohl's, Home Depot, those stocks surged after the earnings. Now, the National Retail Federation expects holiday sales to be at new record levels this year. They expect sales to rise between 8.5 and 10.5% between November and December. So with all that and strong holiday sales season expected, let's take a look at 3 ETFs which are among the top performers in the retail and consumer discretionary space. And these are quite different from one another. So the first one that I'm highlighting is the broad retail ETF. It is the SPDR S&P Retail ETF, ticker symbol XRT. This is an equal weighted ETF, and due to equal weighting, it tilts away from the giants in the space like Target and Walmart, and tilts towards smaller and medium-sized companies that will benefit more from the economic recovery. It has an expense ratio of 35 basis points and quite popular with more than 1.2 billion in assets. To learn more about this ETF, you can go to the quote page on Zacks.com, read our research report articles, and you can use this link to go to the SPDR web page for this ETF, and you can learn more about what it holds. Now, going to the top holdings in the ETF, you will see Dillard's, Macy's, Overstock, Dollar Tree, Signet Jewelers. These are among the top holdings in the ETF, but they are almost in equal weights. And at the time of each rebalancing, they are brought to equal weights. Now, I want to show you another tool on Zacks.com. You can go to the holdings tab on the code page, and then you can look at the holdings. The holdings on the sponsors web page will be more updated, but you can look at the 52-week changes for these stocks which are held by these ETFs, and you will see some of these stocks have done so well. Dillard's, Revolve Group, Signet Jewelers, Macy's, gains between over 600%, 300, 200%. So pretty impressive gains. Now, the second ETF that I'm highlighting focuses on small cap stocks in the consumer discretionary space. So it selects consumer discretionary stocks from the S&P 500 index. It follows a market cap weighting scheme, 29 basis points in expense ratio. This is a small ETF, 57 million in assets. So if you decide to invest in this ETF, please use a limit order. Again, you can learn more by going to Invesco webpage for this ETF using the link on the code page on Zacks.com. You will see what it holds. Specialty retails, household durables, hotels, restaurants, auto components, textiles, and other stocks. And again, you will see Macy's, Signet Jewelers, Meritage Homes, LCI Industries, Shoemaker, Steve Madden. These are among the top holdings in the ETF. The third ETF that I'm highlighting is Invesco Consumer Cyclicals Momentum ETF. So it holds consumer cyclical stocks which are displaying the best price momentum, and so these stocks are selected as well as weighted by price momentum. This has 119 million in assets and has an expense ratio of 60 basis points, so slightly pricey because of that smart beta weighting scheme that it uses. Again, to learn more, you can go to the code page, and from there the external home page for the ETF, and see what it holds. And you will see that Signet Jewelers, Domino's Pizza, Macy's, GameStop, which has been a meme stock, so popular with retail traders, Etsy, and Crocs, these Nike too. These are the top holdings in the ETF. And this ETF, in full disclosure, I hold in the ETF investor portfolio that I manage. On the last slide, I have the comparative performance of these stocks versus the S&P 500 index, and you will see that the Spider Retail ETF is up more than 65% over the past year. The second one, the small cap consumer ETF, is up more than 55%, and the price momentum weighted consumer cyclical ETF is up more than 45%, and the S&P 500 index is up about 34% during the same period. Thanks for watching. Make sure to check out Zacks.com/promo for an interesting offer, and also make sure to subscribe to our videos, our video channels, so that you do not miss anything. And I will see you next week.